DAX are now down more than 1.5%, and the Dow futures is pointing to a start with a cut of close to about 130 points, snapping a two-day winning streak, in fact, for the European markets. Bruno Verstraete of Lakefield Partners now joins us on the phone line from Zurich. Hi, Bruno. How's the mood now? The selling pressure, instead of abating, is only accelerating. What's the expectation from the Fed? And if we do get a number which is not as strong, do you expect a rally?
Yes, good morning. No, I think what the market is really waiting for is a confirmation that the normalization in the U.S. is clearly on a steady path and that the Fed can raise the interest rates to show that the economy is in good shape. Any number which is bad, I think, will be bad and be perceived like that for the markets. Europe is, of course, a completely different game. But I think the U.S. clearly needs to pull the global markets forward and show that the economy is still in good shape.
So in that case, is that your base case, that if the Fed were to hike rates this September, then the markets would actually take that as a positive thing and go higher?
I think so, yes. It would clearly be a sign of strength rather than a sign of weakness. I think an interest rate increase would clearly demonstrate that.
Yesterday, we had the ECB chief, Mario Draghi, downgrade his assessment of growth as well as inflation. And at the same time, because of that, he indicated that they're likely to extend their monetary easing or quantitative easing. Yesterday, we chose to focus on the fact that there is going to be more QE and European markets did well. But today, they've come under pressure. How should we read what came out of the ECB yesterday?
Well, I think a bit in the same way. The fact that QE is on the table is a sign of weakness. Clearly, the European economy is not in the same shape as the US economy. There's a huge pressure on deflation, given the commodity markets, given the weakness still of the European consumer, and also the demand in China weakening. So I think the deflation is clearly the thing to battle. That's also the mandate that the ECB has, and that's what the investors will keep an eye on. So the news that came out yesterday, as supportive as it might sound, that QE is on the table again, as bad as it is for the economy as a whole.
All right, the news that came out is bad for the economy. Perhaps that's why we're seeing a cut on the European markets today. But Bruno, what's your sense as far as the dollar and the euro currency is concerned? What are your levels on those?
Well, I think that is very interest-driven. Of course, the announcement of QE put some downward pressure on the euro, and the interest rate increase in the U.S. would clearly put some upward pressure on the dollar. So I think that of course is the two things that the investors are looking at, and by itself would have a huge consequence on the economy and on the inflation. The fact that the exporters can grow and are supported by a low euro is clearly supportive for the economy in Europe, and of course the US is suffering from a higher dollar. So everything seems to be intertwined, but interest rate differentials are going to be the thing to watch going forward.
Okay, Bruno, we'll leave it at that. Thanks so much for joining in.